And what if I told you that I'm bullish on Tesla and it has nothing to do with EVs? You look at the portfolio of businesses that this company has and the other things in the pipeline that this company has, and there's a whole new reason, a whole new book you can write on why you're bullish Tesla. Like, I'll read them. How about the mega pack that they think by mid 2030s, early 20 or like around 2040 is going to make more money than the cars? How about the power wall? 3 different kinds of power walls, 4 different kinds of charging stations, robotics, robo-taxi, gigafactories, all these other things besides EVs that could be game changing for a company. And my theory on the EVs is Elon Musk is playing a long game to put so much pressure on these other companies that he's going to be the only one left standing. And then there's the China problem with them making too many cars, and they're going to dump them on the rest of the world. So that's a longer play. But all these other parts of their business, the pipeline, they've got 4 or 5 really good businesses within Tesla if you eliminate the cars. Landon?
I agree. I think cars only is a buy on Tesla. I think when you add in everything else that you just talked about, especially, the robotics, I think, it's a longer term play, but that one really gets me excited 5 to 10 years from now. I mean, they could be the world leader in that. It could be, the cars could be a footnote as to what this company does. So cars only, I'm bullish. Add in everything else, then you're really, really talking. I'm very excited. And it's not like this CEO has a problem multitasking. I mean, he can do a lot of different things at once. So I'm not worried about that. And just you can see it in the chart here. I mean, the blue line's people talking about this company and its products. The gray or the lighter line is the stock price. I mean, you shouldn't have them moving away this much without an opportunity. So this is an opportunity in the short term, and then long term, all the things you talked about. So I mean, this is one that I think you can buy the shares and stuff them into your mattress and check back in 5 or 10 years. And I think you'll be really pleased.
Tesla investors have been through a bit of an emotional roller coaster in recent weeks. And this is due to the continuous surging and plunging of Tesla's stock price, which, to be honest, has been a lot for many investors to handle. Moments like this are what cause investors to wonder if it's actually time to sell their Tesla shares, and if Tesla is even a promising company still, and whether or not it's time to get off the bandwagon.
5 of the 7 Magnificent 7 stocks suffered declines last week, with Tesla faring the worst, off about 13.5%, and despite the Mag 7 accounting for around 50% of S&P 500 gains this year, 3 of its members are lagging behind. Tesla, Apple, and Alphabet are all in the red year to date, and once again, you see Tesla leading losses. Yahoo Finance's Jared Blickery, he's over at the Big Board with more. Hey, Jared.
Such as it is, sometimes we group these stocks together arbitrarily. They might be doing something similar for a limited period of time, and then they get stuck. And here we have the Magnificent 7 with huge dispersion between the contributions, among the contributions to the S&P 500's market cap. You look at NVIDIA over there, it's up $965 billion. And then you take a look at Tesla, down $231 billion. As NVIDIA is contributing 33% of the market cap gains of the S&P 500, Tesla is responsible for negative 8%. And sometimes math is just not intuitive that way. But the point is, besides these 4 groups of stocks that are advancing, you have these other 3. And to be fair, all 7 of these stocks have very, very different narratives. I want to point out Tesla versus NVIDIA. So this is the first in class, this is last in class in the Mag 7, and this is what's happening year to date. You can see Tesla down about 27%, NVIDIA up about 78%. And if I show you a 2-year chart, you can really see back when their fortunes diverged, because it was off of the October lows in 2022 that we saw this big rally, and we saw the Mag 7 kind of in lockstep, but you can see the fortunes diverging as we proceeded in the year. That was last year. Now, I also want to show some technical analysis on Tesla over the last 5 years, and what I'm seeing here is just a giant trading range with a couple of forays above and below. And so here we got above the trading range. Here we got below around the turn of the year 1 year ago. But for the most part, we are in a trading range. Until that breaks, difficult to see or difficult to get excited about Tesla going in any direction or the other.
Tesla's dominated the EV industry for years, and its future plans are ambitious too, to say the least. For instance, the Cybertruck is a futuristic-looking pickup truck, and it's turning heads and becoming the figurehead of self-driving technology that could potentially change transportation forever. Tesla's factories are also churning out cars at breakneck speeds, showing just how quickly the automaker can make sustainable transportation the norm. However, it's not all sunshine and rainbows for Tesla, and definitely not for its investors, as the company's stock continues to take a downward trajectory. Today, we're going to explore these recent investor fears, and we'll also find out if Tesla's still a company worth investing in. So buckle up and let's find answers.
For Tesla investors, not a happy 2024 for Tesla investors, as we've seen, maybe just some weak headline news. Kevin and I have been talking about this all week. We haven't seen anything positive on Apple or Tesla over the last several weeks, and the stock's been taking a hit here, down 29%. Do you have any data that says, hey, maybe this is an opportunity?
I tell you what, we do. I mean, we've actually issued a bullish alert to our hedge fund clients. I think it was 2 weeks ago, something like that, at the end of February. So we've got a lot of, it's not incredibly strong data, but it's contrary to the stock's performance, basically. We see a divergence opportunity with the stock falling and most of the data that we have being fairly strong. Now, keep in mind, on their last report, they dropped 12% because of increased costs and sort of vague guidance. And, I think there's been a bit of a shift with EVs. The demand has gotten a lot softer. Hybrids have been doing very well. They've got some momentum going. And of course, headlines like, Hertz dumping their EV fleet, that kind of thing, that's obviously going to cause problems for investors in Tesla. However, when we look at a lot of the data, I mean, it's pretty strong. The only model that isn't doing fantastic on a year-over-year basis is the Model Y, which has been their strongest performer. So it's got a high bar. The truck is, obviously way out there because everyone's anticipating it. I think there's been a few deliveries. I haven't seen one in the wild yet, but I'm looking forward to seeing the first one. But you can see here that most of their vehicles are doing well. The Y is a concern because it is one of their best performers, and the bar is high there. But it's going to be interesting to see what happens once the truck starts getting delivered. Now, I will say they've been putting a lot of pressure on their competition. I mean, when you look at the price drops that they've pulled off, Ford has had to kind of match. They dropped their Mustang Mach-E down to 48,000. They dropped it 8,000, but it's still higher than the Model Y, which also qualifies for the tax credit, and the Mustang does not. So, they're creating a lot of problems for their competition. But you look at just how they're doing compared to some of the competition, you can see Tesla's increasing web visits, Ford and GM, not so much. So, we've got good data on them. Everything is fairly strong. The mentions themselves are up about 5% on a year-over-year basis, while the stock is just getting crushed. So I like Tesla long-term based on the data. I like the company personally, but I don't let that get in my way. I read the data, and the data looks pretty good with the sell-off that does warrant, in my opinion, buying of a dip here and heading bullish into the rest of this year.
Tesla is one company that is electrifying the world. It's not just your average car company, but more like a tech disruptor with a garage full of shiny electric vehicles. The automaker has demonstrated an impressive level of profitability in recent years, and its potential for further profitability is also very promising. Now, this is what we think. As Tesla continues to expand its product offerings, offering new vehicles, technologies, energy storage solutions, and other services, its revenue is likely to grow too, probably much bigger than the big names today. Hey guys, welcome back to Tesla Tomorrow. Sometime last year, Elon Musk predicted Tesla's stock price would rally in the future, and he said this in a Twitter thread, responding to a user who said that in 10 years, those who haven't invested in Tesla will have big regrets. According to the Twitter user, 10 years from now, a lot of people may regret not investing in Tesla. He also added that given the amount of information available today, there's no excuse for an investor to miss out on the company. Replying to this, Musk disclosed that now is the time to invest in the company since the stock is trading at a low price. The CEO further advised investors to buy when others panic and sell when they're buying irrationally. Right now, all this might seem like promises. And so, to truly understand what Elon Musk is trying to say, let's explore some of the reasons why Tesla's zooming past its competition. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla burst onto the EV scene with its Roadster, a sleek sports car that proved EVs could be sexy and fast. But over time, the automaker realized that speed wasn't just enough and it needed to mass market it. So the Model 3 was a nudge to get people out of their comfort zones and, of course, gas stations. It wasn't all smooth sailing, with production snags and Elon Musk continuously making headlines, but the car company did persevere, proving that building a new kind of car really isn't a walk in the park. Fast forward to today, and Tesla's become the undisputed king of the EV castle, with its Model Y SUV reigning as the best-selling car, not just EV. Tesla also has a network of fast chargers called superchargers crisscrossing the country, making range anxiety almost a thing of the past. But that's just the tip of the iceberg, because Tesla's not stopping at cars. It's also pushing the boundaries of battery tech with its battery Powerwall home energy storage solution.
You've got some data on the Cybertruck. Of course, that's probably getting a lot of talk there. But is this about maybe their lineup of cars getting a little bit of stale? Now, the Cybertruck, it's new, right? But it's going to be an outlier as far as sales. Do they need to come up with a new model here? Because it seems like everybody else is doing that, especially over in China, where they've gotten competition from BYD and others. But now, yesterday, Rivian announced that they're coming out with their R2, and they actually just announced, the CEO just announced that they have over 68,000 reservations for that in under 24 hours. So is competition part of the problem too, along with the hybrid story?
Yeah, I mean, obviously, a world without competition is better, but it doesn't seem to phase Tesla because they seem to always have the best product, and there's always hype for the next best thing out there. But then when the car is actually realized, when it's delivered, you start comparing it, and what we've seen is that Tesla holds up where others are maybe, the hype, it outpaces the reality. So yes, obviously, Rivian, I think they've got a lot of potential. They're also talking about that R3, R3X
right,
that they're going to deliver in 2026, and of course that's going to compete directly with the Cybertruck. But Tesla has shown its ability to dominate the competition. I mean, it's not just like they have the best car. Now they have the best car at a really, really reasonable price. I mean, the numbers that they've got coming out for these cars are just unbelievable. I mean, you can rewind and think about the Roadster when it first came out at like 120, I think, 120,000, and that seemed reasonable because of the 0 to 60 numbers it was putting up and the luxury that it had. And now you've got cars that are as good or better, and they're 40, 50,000. Some of them are in the 30s. So Tesla is showing their ability to not only deliver a great product, but also do it at numbers that competition just can't touch. So I think long term, yeah, there's going to be some competition, but they have such a lead, and they're expanding so quickly. It's going to be very difficult for competition to catch up with them anytime soon.
Yep, great breakdown. And I'm guessing you guys have data, even though stocks pulled back, you guys are have an earnings score that would be elevated at this point.
Yeah, so when when we're not directly in earnings, when we look at more of a long-term play, because of the pullback and all the data that we've got, we're actually at a plus 80 on this one. Long-term, it's not we're talking about like a year outlook, that kind of thing, not a few weeks. So that's why I'm pretty bullish on it. Again, a lot of it has to do with the stock's performance. If we were up 250, 300, I'd be saying this is valued pretty fairly, but right now it seems like a big opportunity.
Tesla is one of the most followed stocks on the market, and it's not surprising given shares of the automaker performed very well over the long term. Tesla is one of the biggest car companies in the world today, and it will continue to be so for years to come. Anyone bearish on Tesla right now might not be fully aware of what the company is and how effective its business model is too. Therefore, people who want to invest in Tesla have got to understand the massiveness of the company, because that is how you can decide whether or not it's truly worth your investment. Tesla is a company that is well known for its exciting lineup of products and business models, which have all proved to be very successful. This company is very well established in several business sectors, reporting massive numbers in revenue quarter after quarter. Now, this diversity in Tesla's business model has been the major driver of its growth. And if you look at it critically, Tesla has not only succeeded by being an EV manufacturer, but it's also made significant gains from energy, FSD insurance, and even superchargers. All these businesses and ventures make up the company's valuation and will collectively send Tesla stock to a whole new level.
Tesla is a Magnificent Seven's biggest laggard year to date, but it's not the only one. Shares of Apple and Alphabet are also in the red since the start of the year. Now this week, we are focusing on these three laggards and what it's going to take for the companies to turn things around. Today, the focus is Tesla, currently trading just around $179 a share, a loss of nearly 30% this year alone. Our next guest, though, saying that now could be a good buying opportunity. For more on that and what the catalyst will be, we want to bring in George Gianarikas. He's with Canaccord Genuity's managing director there. George, it's great to see you. So talk to us about why you think Tesla is a buy at these levels.
Well, first, let's address the reason why it's lagged. I mean, it's pretty simple. The numbers have come down. I mean, if you look at the earnings revisions for the last 12 plus months, they've been terrible. I mean, I think we started for 2023 somewhere early in that year on $6, and it came all the way down to $3. And I think we're at a period of time right now where the worries likely exceed the reality. And we had some numbers last week come out of China that weren't very good, but those people didn't take into account that the new year has been pushed into February. Also, some stuff that happened in Germany. Their plant came down for about a week because of arson, a week plus. And in the U.S., people are worried about the production of their new Model 3. And we think that the best way to kind of gauge, for the most part, what's happening with Tesla, particularly in the U.S., is to look at their prices. And they've been pretty stable in the U.S. over the last few months. So, there's a lot of wood to chop still in the quarter, but in the near term, we think that we may have overcorrected here to the downside.
They talked on their most recent earnings call, George, about the spending and some of the record R&D that they had done during 2023, which now places a lot of emphasis on bringing that to fruition in 2024 and years following. Now, how much of that spending do you anticipate will lean further towards the side of this artificial intelligence narrative that has started to prevail with Tesla, even though we've seen some early slippage this year, at least in the price action?
Look, we're in a little bit of a pause period right now for the stock. In the near term wiggles, we think we've overcorrected, but for the stock to really get its legs, we have to have three things happen. First, the next generation vehicle has to start to ramp, or people have to gain confidence that it's going to ramp and be successful. Second, their margins need to go up, and the most likely lever for that happening is the increase of FSD, full self-driving penetration, which leverages the AI that they've built, in addition to volumes starting to pick back up. And third, it's continuation in growth, really good growth in their energy storage business. So when you talk about leveraging this R&D that they've spent a lot on, it's two real products that come out of that, the big spending. It's number one, that next generation vehicle, which we think should start production in the second half of 2025, and continued FSD penetration. Now, we think that the FSD offering from the company at $12,000 currently is a little too rich, particularly relative to the cost of the vehicle. We think the company should cut the price of that FSD to really increase penetration and really have the margins start to turn in. If you think about it, that offering is about 100% gross margin, very, very high gross margin because it's a software upgrade.
In the last few years, since its founding in 2003, Tesla has manufactured several groundbreaking cars, and some yet to hit the road, like its crossover, the Model Y, becoming the best-selling vehicle worldwide in the first quarter of last year, and Elon Musk saying the Cybertruck will be the best Tesla vehicle they've ever made. Tesla looks after its own manufacturing, the repairs, and insurance of its cars, since it has every incentive to make sure they're simpler and cheaper. For most Tesla investors, electric vehicles are actually headline numbers when it comes to sales on the company's balance sheet. But if Elon Musk was to be believed, then another part of Tesla's business could also play a significant role in a chunk of its profits. For instance, Tesla has its own insurance business, which is thriving, and according to Musk, Tesla's looking to offer it nationwide and internationally on its cars. The Tesla CEO said this during the company's previous annual shareholder meeting. Aside from generating revenues from its businesses, providing auto insurance to customers helps Tesla solve two problems. First up, it reduces the cost of insurance for Tesla vehicles, and then Tesla's insurance business could also boost sales of its cars by reducing the overall cost of ownership. Similarly, while Tesla's flagship EV segment has generated a big percentage of the automaker's revenue, the energy generation and storage segment has also contributed significantly to its margins. The fast-growing business deserves more attention because it's on track to continue to account for a larger percentage of Tesla's overall sales and profits. Of course, Tesla has its own share of critics. However, there's no denying that it has made an impact and forced the industry to take notice, push battery technology forward, and also made sustainable transport cool.
We have seen, though, the price wars play out. Obviously, Tesla, far from the only automaker, one of many, I should say, that has been forced to lower the prices, obviously putting pressures on margins, very similar to what you were just saying. How do you see that, more broadly speaking, beyond Tesla, shaking out just a bit, and that pressure to the downside in terms of boosting demand? How much longer are they going to be forced to slash prices in order to drive the demand that we simply have not seen?
Well, look, there's been a pause, like I said, recently, particularly in the U.S. The price declines that we saw for the most part in 2023 is sort of ebbed right now, which for us is an indication that maybe things aren't that bad. And what the company did strategically by being that aggressive is, first of all, they get to sell more vehicles, right? Because interest rates went up and most people finance the purchase of their vehicles. So that meant that the prices of vehicles went up artificially. But second, it put a lot of their competitors on their back legs. I mean, margins got a lot worse for some of the pure play EV competitors. Sales got a lot worse for them. And even for the traditional OEMs that try to compete against Tesla, their margins got significantly worse because they couldn't compete with Tesla on price. So what we saw is, longer term, what Tesla did is put a lot of its competition on the back foot, particularly in the United States and Europe.
And so let's talk then about China, because that's one of the larger kind of lingering risks right now for Tesla. Is sentiment shifting so much in the region that there would be a longer term implication for how Tesla is able to operate and sell into China as well?
That's a great question. I mean, look, we see the real competition for Tesla long term. Look, we really like Rivian in the United States and in parts of Europe and other parts of North America. But in China specifically, there's some very, very good OEM competitors, some pure play EV companies. The company has one plant in China right now, able to produce about 950,000 vehicles. And they're running, despite this monthly volatility, they're running full tilt there. And we continue to believe they'll run full tilt in that country. So there's really good competition in China, but we think Tesla can operate that factory at relatively full capacity that leaves them in a good place in that country.
So, George, as we wrap this up, we started this segment talking about the share price being under pressure. We're trading around $179 a share today. What more specifically does that upside look like?
Look, our price target is in the 230s, and we base that on 26 times our 2026 estimates. And we think that's going to happen as volumes start to pick up next year and the year after that, based on increased Cybertruck production and the next generation vehicle. And importantly, we think that the margins will start to get better, particularly as we've seen an abatement in price reductions, at least for now, and costs continue to come down for the company.
So we've established Tesla's a game changer, but with all the buzz going around the company, the question still remains, is it a good investment? Let's take a moment to analyze this. Tesla bulls have plenty of reason to be optimistic. For one, the EV market is still early, but Tesla's brand recognition and loyalty make it perfect. The company's continuous innovation from Cybertruck to self-driving tech keeps it ahead of the curve, and it puts a focus on battery tech, which could pay dividends in the future as renewable energy becomes more mainstream. However, the bears do not expect so much for Tesla. For them, Tesla's stock price has already had a wild ride, and some even say it might be overvalued. The EV market is getting filled up, and the bears believe that the competition from established automakers and new EV startups will keep heating up. So should you invest? Well, here's the thing. The decision to invest in Tesla depends on your risk tolerance and investment goals. If you're a thrill seeker who believes in the future of EVs and Tesla's innovative spirit, then it might be worth considering. However, if you're squeamish about volatility and prefer to go for more established companies, then maybe Tesla isn't the right one for you. Tesla's a fascinating company, and investing in it could be exciting, and it could be a great opportunity, although it does come with risks and uncertainties just like every other stock out there. Right now, all the road to a sustainable future might lead straight through Tesla's metaphorical garage. So whether Tesla's the best company in the world actually depends on your priorities, but what is certain is that the company is pushing boundaries, challenging the status quo, and making headlines. Tesla is a sign of the future, where clean energy and innovation rule the road, and we think that's one worth getting excited about. But what do you think? Is Tesla still profitable? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.